The ASX 200 fell for a fifth straight session Monday, but the real story isn't on the stock screen. It's at the fuel pump and in the minutes of the next Reserve Bank meeting. U.S.-Iran peace talks have stalled again. Oil is climbing on Strait of Hormuz uncertainty, with Goldman Sachs upgrading its price outlook as the risk of supply disruption remains unresolved. Australia imports roughly a third of its refined fuel, and major banks are now warning the country is among the least prepared developed economies for a sustained oil shock. A fire at the Geelong refinery this week added domestic supply uncertainty on top of the global pressure. Here is the mechanism that connects oil to interest rates. Higher fuel prices feed directly into transport costs, utilities, and ultimately consumer price inflation. The Australian dollar has already moved. It advanced sharply Monday as surging energy prices increased bets on an RBA rate hike. Rate hike bets push borrowing costs up even before the RBA meets. Mortgage holders who were expecting relief in May are now bracing instead. The RBA's position was already politically charged. The governor purchased a $2 million beach property on the same day Australians were absorbing the last rate rise, a detail that will not be forgotten if another hike arrives. The unemployment figures released last week prompted one analyst note titled simply, "Rate Hike Warning." The phrase, "least well-placed to handle an oil crisis," came from a major bank. That language is not accidental. It is calibrated. While the broader ASX drifted lower, one stock drew a 14% surge and rewrote the conversation around infrastructure valuations. IFN Investors, which already holds close to 35% of Atlas Arteria, launched an unsolicited off-market bid Monday at $4.75 per share. A conditional sweetener lifts that to $5.10 if IFM reaches a 45% stake before the offer closes. The total bid values the toll road operator at roughly $7.4 billion. The market did not accept the opening price. Atlas Arteria shares traded above the bid immediately, settling near $4.96, about 20 cents above the $4.75 floor. That gap is the market's verdict. The final number is not $4.75. IFM's existing state gives it structural leverage. It already shapes the shareholder register in ways that complicate rival bids. But the independent board committee has brought in UBS and Mallesons, and shareholders have been told to take no action. That language, take no action, typically signals the board believes a better offer is achievable. The conditional $5.10 price exists precisely because IFM left itself room to move. This bid also landed at a moment when infrastructure assets are re-rating globally. Toll roads generate inflation-linked revenue. With oil-driven inflation becoming the dominant macro theme, assets with contractual price escalators are drawing renewed institutional interest. IFM's timing may be opportunistic, or it may reflect the view that infrastructure assets are about to become significantly more expensive to acquire. The causal link between stalled peace talks and gold prices ran in opposite directions Monday. The dollar firmed on oil-led inflation fears, which technically pressures gold, but ASX gold stocks largely held or gained because the inflation fear itself is bullish for gold over a longer horizon than a single session. Gold is trading near $5,000 per ounce. At that level, Newmont's quarterly result came in as a strong beat across both operating and financial metrics, and Morgan's put a $208 price target on its shares. Regis Resources was upgraded to buy after a quarterly that added almost $200 million to its cash balance, bringing total cash to $1.1 billion. Barton Gold's March update reported high-grade mineralization of 170 grams per ton at its Challenger project in South Australia, and the company confirmed it had pre-secured diesel supplies for all 2026 drilling programs, a detail that signals management is planning around energy disruption, not hoping it resolves. The weight of evidence here leans toward continued gold sector outperformance while the Iran conflict remains unresolved, but this holds only if oil stays elevated and inflation expectations stay unanchored. If U.S.-Iran talks resume meaningfully, there are reports of Oman facilitating diplomatic contact, oil could reverse sharply. Gold would face a dollar headwind, and the premium being applied to gold stocks would compress quickly. The verification point is the next confirmed diplomatic meeting between U.S. and Iranian officials. If that is confirmed within the next week, watch gold futures for the initial read on how serious the market judges it. If no talks resume and oil closes above $95 by Thursday, the RBA rate hike probability firms further, and defensive positioning in gold and infrastructure deepens. That is where the next week's ASX story most likely lives.